everyone, and welcome to Coffee with Lynette. Today's very, very special guest is David Quintieri from Money GPS, who is a man after my own heart because everything that he does is data-based. So you can see his work as he explains it to you. He's written 2 fantastic books. They've received 5-star reviews because it's basically blueprints helping you understand the financial markets. So I can recommend that to anybody. You can find him on YouTube, Steemit, DTube, and Patreon. Definitely a channel worth paying attention to. And he's quite popular on the interview circuit because of his database presentations in easy to understand language. So you may have seen him on Watchdog USA, Rethinking the Dollar, and a lot of other places. What he really tries to do is aggregate the data rather than prove a point. You can then draw your own conclusion. So with that in mind, I would like to welcome you, David. Thank you so much for being here today. It's really an honor and a pleasure.
Well, thank you very much for that fantastic introduction. I know a lot of my subscribers and your subscribers are definitely part of the same group of people. So we're all in this to learn and figure it all out for ourselves, because we know that nobody's going to be there to tell us when to buy, when to sell, when the crash is coming. We just need to be able to be smart about things. So that's what my channel's about. I'm sure that's what your channel's about as well. And so thank you again.
Well, I want to start out by asking you what really motivated you and motivates you to do this work?
Well, it all started off with one YouTube video, and I was quite upset of what I saw in the mainstream news, and I thought to myself, I need to make my own video about this. This is ridiculous. So I got on YouTube, made a video. At that time, I had already been writing my first book, so this was sort of interconnected with that, but the YouTube just started to, I mean, at first, nobody was watching, of course, that's how it is. Right. But eventually I started to get some comments, started to get some talk happening, and then people were just like more and more and more and more. So now I'm doing 2 videos a day, and people are just eating it all up. They're really enjoying it because there's, you know, the way it moves is just faster and faster.
Yes.
If we would have had the same problems, you know, 20, 30 years ago, it would be moving at more of a snail's pace compared to today. So there's never enough time.
So, well, really, what bothers you the most about the information that the general public is being fed about what's going on? What bothers you the most about that?
I just don't like when I see a lot of, for example, unemployment rate. You hear that in the media, and I'm starting to go away from laughing at it to actually getting a little bit upset about it now, because you just keep hearing unemployment rate, unemployment rate. People don't know what it really means, and I'm sure 95% of your subscribers and mine know what it is, but it's the 5% who represents really the whole mainstream is unfortunately not aware. So as you know, unemployment rate, if they aren't able to find a job within the 1 year, they're just pushed off the statistics. That doesn't make any sense. Right. How does that make any sense? How are they not unemployed anymore? And then we have all the fact that we have people taking on 2 and 3 jobs. Those have been escalating since 2010. We've seen multiple job holders. That skews the statistics because we're getting people that have, let's say, 3 jobs. The numbers don't make sense anymore. And of course, you have all of the different factors. Shadow Stats breaks it down much better than I can ever do. But yeah, ultimately, brilliant. Of course, I mean, just looking at it and trying to really break down what's the truth. I hear unemployment rate, but even the government's own numbers of the U6 are more accurate than the U3. So at least let's focus on that. But no, they bring us the U3 statistic because it looks pretty.
Right, and that's a lot of what they do. So, you know, you brought up the fact that they're doing this to hide things, and we do know that stock buybacks, announced stock buybacks have just recently hit $1 trillion. How do you feel that that impacts what the normal person sees when they open up their retirement plan, statement every quarter?
Unfortunately, it's not going to end well. We see this occur periodically. However, this is an all-time record. So the estimation is even as much as $1.3 trillion of buybacks are going to take place within 2018. It's unprecedented. I believe last year it would have been about half that amount. And last year was a massive number of buybacks. So we're going way, way out into left field here with these buybacks going beyond just, okay, they regularly do this to some crazy level. That's not normal. And there's been basically two major factors here at play. We have the buybacks, we have the quantitative easing. The quantitative easing stopped, well, at least on the, on the surface level. But
well,
when
it depends on where you look.
Of course.
But yes.
But the Q3 program, let's say that was officially ended anyway. And then we look at the stock buybacks, that's pushing the stocks up. But it doesn't just take these two factors. We got to look around the world. Where is the money flowing in? The Swiss National Bank is printing up money. They're buying up shares in the US markets. It's not retail investors. These are the minnows. They're chasing the big fish. Okay, the retail investor with their 7 shares of Amazon, hoping that they're going to retire from it. Unfortunately, it doesn't really make a difference compared to the big boys, the quantitative easing central bankers.
And the sovereign wealth funds, too.
Absolutely.
I mean, they really own pretty much all the stock market. So what do you think that really tells people about the liquidity, their ability to buy and sell as they want to?
Liquidity is really everything. It's a topic I'm discussing all the time, especially more recently. One of the biggest fears is what the next crisis will be. And a lot of individuals are starting to talk about the fact that if everybody is rushing for the exit, then who's going to buy my 7 shares of Amazon? What's going to happen with that? So this is really the one big factor that people don't realize. Everything's great on the way up. Everybody's having a party. Your banker is driving a Ferrari, but soon he's going to be taking the bus. And that's just the way it is.
Well, how does that impact the retirement plans? Because I know that that's a favorite topic for you to talk about. Certainly a favorite topic for me to talk about. So the pension plans, those 401ks, the IRAs, how do you think that's all integrated?
I just want to be honest, and I don't mean to hurt anybody's feelings or anything, but what we're going to have to see is widespread pension fund cuts. If you think that you're getting the amount that you've been told, unfortunately, it's just not going to happen. And if many people will deny this, all you have to do is get onto the internet, open up a newspaper, ask your friends and family, because they've already been cutting back. They've been cutting back on average, 30%. That's what my findings have told me. Whenever they do pension cuts, 30%. That would be significant to anybody. I've seen even some of them 50% sometimes. And look at other private companies that they go bankrupt. They don't have to pay your pension anymore. They're bankrupt. So you don't know what's going to happen. And that's unfortunate because people are relying on these pensions. That's really where I feel really bad for a lot of people who have been getting their pension. Maybe they have a health issue going on. They can't work. It's not as if, well, okay, go get your butt back to work. Sometimes they can't. So it's truly unfortunate.
It really is. And, that kind of takes us into not just the pension plans, which over the years, what we've seen is that the private pension plans participation has been going down as the public has been going up. But even in the private, they're all severely underfunded. Now, the private realm, they, like you said, they can declare bankruptcy, and then those pension plans are given over to the PBGC, and then the PBGC cuts the benefits pretty dramatically. And with the laws that they passed in 2014, whether, particularly in those union plans where you've got the groups, there's nothing you can do about it. It's not illegal for them to cut all of those promises and those contributions, that you've put in there. But,
Yeah.
you know, part of what bothers me personally is that, you know, I mean, look, it makes sense for them to do all the share buybacks to try and make those stock markets look like they're going higher, because that's what's in most of the retirement plans, whether there's pensions or anything else, in the most overvalued market in history. But the rest of it is in bonds, and then even real estate that's not liquid. So you've got all of these people that are counting on retiring from funds that, you know, well, the managers are making money, but really they're in all of these overvalued circumstances. What do you think people can do about that?
Well, we need to get smart. And unfortunately, we can't rely on anybody else. If you're going to get that pension, you happen to get it, that's great. Fantastic. But expect that you will not get it. That's what I think people should be doing. Just assume you're not going to get it. What do I got to do? And what we can get into is investing on our own. We have to do this. And generally what we do is we buy things that are undervalued at that given moment. Okay, so maybe you would think stocks are overpriced today, but hey, maybe 10 years from now, they're going to be underpriced. Right. And then it would be a more wise decision to buy it then. You don't buy things when they're overpriced. You accumulate assets over years, over generations, and hopefully be able to be wise with everything and pass it down to the next generation. That's what's so fantastic about precious metals. Unlike anything else, it has the ability to be passed down generation to generation.
And it's also, it's for me, when I'm looking at the valuations in the markets, both physical gold and physical silver are the only things that I can really see right now that are severely undervalued.
Oddly, with all the quantitative easing, we have all these central banks printing up $15 trillion since the financial crisis. Somehow, the only thing that did not see the effect of quantitative easing has been gold and silver. The only thing, basically. Look around. Everything is in a bubble. Everything. Right. Whether it's art and collectibles, whether it's equities, whether it's anything. Gold and silver, still basically trading within a range for years. That is an anomaly that we will be referring to for decades and decades. There's no way. And well, we know what's happening anyway with gold and silver.
Right, with the manipulation, because it's easy to do with a piece of paper. I mean, it costs $1.10 to control 100 ounces of gold and 5,000 ounces of silver, and or is it? Let's see, it's 5,000 barrels of oil. Maybe it's 500 ounces of silver off the top of my head. But it's, you know, so that's dirt cheap. It doesn't cost anything to manipulate those real tangible assets. Personally, I have a bugaboo, because what Wall Street wants you to think is that gold and silver have no value, because after all, they don't pay an interest rate. Well, they don't have to pay an interest rate because they're savings. They're not debt, but they are actually used throughout the entire global economic structure. So there's always demand. And yet they are the most undervalued assets, the only really severely undervalued assets, as you pointed out. So
it's funny the way we look at it, where they say gold is not money and gold is, you know, never going to become anything. It's a barbarous relic and all this silliness. That's fine. I don't actually expect to have gold as part of the monetary system, because right now we've seen the central bankers have completely taken over. Mm-hmm. And as far as I'm concerned, they're not going to let it go. We'll see what happens in the future. I'm not making any predictions or anything, but I'm not necessarily betting on it. But that doesn't mean that the value of it shouldn't be higher, because we're pricing it in these fiat dollars. If the fiat dollars have lost money, there we go. It's gone higher. Every asset has gone higher, but not because it's worth necessarily anymore. It's a devaluation of the currency. Look at the cultures of the East. The cultures of the East, whether we're looking in Middle East, we're looking in Asia, it doesn't matter. They take gold, particularly gold coins, and they have, let's say, a wedding ceremony. People give gold coins. They don't necessarily think, well, today it's worth 1,300, so I'm going to crop a piece off of it and just give them that much. They're just giving it, and they're passing it down from generation to generation, keeping the wealth within the family and friends and things like this. they don't necessarily consider the daily price because it's a physical metal, and the price we see is based on some futures market that some computer decides what the price is going to be today.
Or the central banks decide what the price is going to be today. Because
Right.
a rising gold price is an indication of a failing currency. Now, I will say this, because I've studied currencies since '87, and you see the same kind of patterns. And, you know, they're always measuring confidence, because this whole monetary system is a con game based upon constantly developing debt, or the ability to grow more debt. Whereas gold and silver are savings. Now, usually when everything implodes and people get beaten and bloodied and bruised, I mean, if you look at what's happening in Venezuela right now, they keep coming out with the new money, right? Oh, the strong Bolivar, the goofy Bolivar, whatever. They just change the name and call it the same. People don't trust the currency anymore. So that's typically when at least a component of gold will be put into the currency to stabilize the value and generate that confidence back in the public. And then, of course, over time, they'll start to, you know, destroy that just like they have every time. So, you know, personally, in my studies, they revalue the fiat against monetary gold. And that's when gold, in terms of that fiat, expressed to its true value, which is really just to preserve your purchasing power. That's the most important function of gold.
If I may,
please.
What I suspect will happen next time around is that we're going to have a crisis. I don't know if it's going to be this next crisis, perhaps one in the future, where the monetary system's at risk, and we're going to have all of the, you know, big supranational institutions, the IMF, the World Bank, the G20, they all come together, say, we got to fix it. How are we going to do it? They create a new monetary system which backs our current system based on something like an IMF SDR, which supposedly will have some gold in there as well as a basket of currencies. I could see something like that happening for sure. That's one of the things I've been thinking a lot about over the years.
Yep, me too.
But ultimately, we're just going to lose more sovereignty. The individual is going to lose more sovereignty, and that's just the way it goes. And unfortunately, that's why I think people need to get their own precious metals and get their own way of investing in everything, and not just rely on government systems like pensions and everything.
Social security schemes, retirement schemes.
Right.
I really agree with you 100% on that, because for me, when I'm looking at all the data, what I see is a lot of wealth transfer mechanisms. And, you know, can you see, you know, one of the things people think that the central banks can keep doing this and doing this and doing this, because inside of every, or I guess at the bottom of every crisis, they've created all of these new tools to push things up. I don't see that they have any more tools left. I mean, they could surprise me. They've certainly surprised me before in 2008. But can you see any tools or any other mechanisms that they might be able to come up with during this next crisis to keep things floating? Because I think everything died in 2008 from my data.
Right.
And it's just a zombie system.
The short answer would be to what I like to call, I made up the term, confetti-ize the money. And ultimately, that's what they're going to have to do. They're going to print the money until it's completely worthless. They're going to do it. They're going to go, they printed not 4 trillion plus, they printed 20 trillion plus. The 16 trillion we found out about in the limited audit of the Federal Reserve. That's just a fraction of it, I'm sure. So they're willing to go into the Weimar territory of quadrillions. I think that's where it's heading. I'm also looking at interest rates. I'm thinking based on what we've seen before, I'm sure you've seen the charts showing the Fed funds rate. My assumption is it will not be able to touch higher than 3%. That's just a guess. And at which point they'll have to come back down to reality, which is all the way to zero. And I'm even thinking that it's going to come down below zero the shadow Fed funds rate has been lower, but I'm talking about the actual Fed funds rate being into the negative territory. Janet Yellen, before she became the chair, said, I'd be voting for this if we could do it. They never got the chance to necessarily, but I'm expecting that they will engage in this negative interest rates, though it has, as far as I'm concerned, basically zero impact. It's not going to fix any problem whatsoever. But then again, well, I have this thought about the whole system, and it's purposely designed to fail. It's not as if they want to prop it up. My idea is that the central banks, along with all of these other mega corporations and everything else, what they're doing is they're creating a crisis in order to come in, pose as the saviors, and buy up all the assets. So when stocks crash down, you're saying, please, please, please save us. So then, okay, sure. Federal Reserve comes in, they print up $1 trillion and buys Apple up. Everybody's happy. But now what you don't realize is that a central bank who has no transparency, who has no realistic goal to protect you, now owns Apple. Oh, and now they own your data. Now they own everything. Now they own all these different companies out there. And you have guys like Warren Buffett, who owns now a big chunk of Bank of America at one point. So now he's taking on this, getting the sweetheart deals. You and I can't get those deals. So we've got a big problem where all of the richest of the rich and those who are not transparent, the central banks, are buying up all the assets. I didn't give them permission. Let the bank fail.
Right.
If I have to lose my deposit, if I lose my deposit as a result, that's too bad, because I shouldn't have my money in the bank then. That's the way it is. When we set up these safety nets, we create a moral hazard, and we only make things worse.
Oh, I'd agree with that 100%. There's no doubt about it. And it really is. It's really interesting because I always see all pieces of risk transfer. So since 2008, really, they've been shifting the risk invisibly to you and me. I mean, that it's like hiding in plain sight, because everybody has access to the same data that you and I have access to.
That's right.
You know, no special privileges. But, you know, I see them transferring the risk from the few, from the private corporations, because of course central banks are private corporations. They're not controlled by the government, but from the few to the public. Because while the central banks are private corporations, we, the taxpayers, are obligated to support their balance sheets.
That's right.
You know, and the other piece of that, recently, the value, according to the Federal Reserve, and I know you're in Fred all the time, and the value of the dollar, according to the Federal Reserve, has now broken below 4 cents out of the original dollar in terms of purchasing power value. So, you know, the negative rates are really about attacking principle, because inflation has already gotten all of the value. And the only reason why it's still even used is because of public confidence. But the banks don't have confidence in each other. You know, the central banks know that they're going to do, different central banks will do whatever is appropriate for them. But of course, everybody's part of the IMF. So let each individual central bank essentially completely bankrupt their governments, and then let the IMF, which are, you know, independent of all governments, they don't even pay taxes anywhere, come in as the savior with that SDR. I've been saying the same thing for years. There's no doubt in my mind that, of course, I could be wrong, because that's not something within my control, but I've been watching the evolution of the SDR, which, for people that are not familiar with it, the SDR stands for special drawing rights. It's a name, just like any other name. And they've got to first burn off all of this debt and all of these obligations before, this is my strong belief. I do not see how you could take the garbage that killed the old system and put it into a new system and not have an impact. I mean, especially if it's something that is supposedly immutable. You can't change it. So they got to get rid of it first. And now that they've taken all the value, what the negative rates are really about, and they've been testing the parameters of them, is attacking your principal. They say it in every single thing. The best thing about going cashless is that there are no limitations on how low those interest rates could go. So if they want you to spend, they just keep charging you those fees to hold that money in your bank account. And if you cannot take it out in cash to preserve your principal, forget the purchasing power for a minute, but you can't do that, then what are you going to do? You're going to go buy something with it in an attempt to preserve your principal. That's hyperinflation. That's what people do during hyperinflation. So that's just hyper deflation.
Right. So. It's what I see right now is that the value of the currency clearly, as far as I'm concerned, has been devalued. Not just, I mean, we could look at it against the purchasing power of food and energy and other things, but you can't even go to the bank and get out a few $1,000s. Like, we don't have the money. We don't have it. I mean, where is it? You guys have all this money. It's not even physically there. Like, it's just zeros on a computer. And when I think about it, I mean, it's crazy. It's crazy. It's not even in paper form anymore. Hi, I'd like to take out 5,000. No, we don't have the money. We can't do it. We have to call in advance. Like, you're a bank. You have a vault. Like, it's empty. I mean, this whole thing is a when they say fiat, I mean, it's serious. It's fake. I mean, it's not fake. There.
And what you're talking about is, it's psychological terms, is called nudging in terms of perspective management, right? They don't want you to have the cash, because if you use cash to buy things, they don't make a fee and they can't track that transaction. So for governments, they can't tax it, right? If everything is digital, well, they know every single penny that you earn and every single penny that you spend. And if your spending does not match your earnings, and it also, then, you know, that can raise a red flag that the computers, those algorithms, can pick up like that. Plus, they can pull it out of your accounts. They can force you, they can force you into the tax system that they want, and you have no control. It's so interesting. I did a piece recently on an IMF piece, and where they were talking about creating distance between their policy and the public, so the public wouldn't think that they're trying to control everything, when the whole rest of the piece was talking about taking them cashless and controlling everything. But they don't want you to know that. They want you to volunteer it. So they'll nudge you. That's why there aren't as many ATM machines. There is not as many drive-through tellers. Sweden is ahead of us because they've been testing it right along, and that's what all the negative rates are about. It's testing. How far can they push? What are the ramifications? So how do we have to do it a little bit different? And they try it at places that aren't so visible, like Cyprus with the Bailin.
Right.
It's
funny about the bail-in is that if you ask, I would say about 99% of people outside of Cyprus, they have no idea that it ever happened. And if you tell somebody that it happened, they would say it would never happen here.
Oh,
but you ask the people of Cyprus, probably 6 months, even 3 months before it happened, would it happen here? Is that possible? They would say no, of course not. And it's the same thing in 2008. I get a lot of comments on my channel. The stock market will never crash. Real estate will never crash. They're not going to let it crash. They want it to crash. The Fed was here in 2008. I promise you. I know that you've just been investing for 6 weeks and you're a professional, but the Federal Reserve existed in 2008, and they let it crash because it's done on purpose. They dry up liquidity in order to create a crisis, and they pump up the liquidity when they want everything to move up. They are the ones who decide. They are the arbiter of all of this going on. And people don't understand that. Why? Because they have 7 shares of Amazon and they have to protect it. And I realize that it's called normalcy bias, and people want to protect those ideals that they've set up inside their mind.
Exactly. But that's exactly what they did into the crash in 1929. And people think, well, that was then, it's different now. No. That was the beginning. this is the end. And do you see parallels? I don't know how much you've studied that period, but yeah, you're a student. You have. Are you seeing parallels between then and now?
Well, in many cases, yes. One of the, if I could just go back a little bit further in history to 1920, we had a depression of 1920, and what did the government do? They slashed spending by 60%, and within a year and a half, the stock market was flying. Okay, then we had the Roaring Twenties, and then they started intervening then. But there was no intervention on the part of the central bank during that time period that allowed the boom. They just slashed spending. They just said, let's let this actually resolve itself and real investment could come in. If you look at what's happening right now, we had way too much intervention throughout 1929. And look at what happened in Germany as a result of a crisis. So we got to watch out. It's not just about economics, okay? We can have some things that start to happen, a little conflicts that go back and forth between countries as a result of all of this. It worries me. One of the best books I've read on, actually two books, on 1929 specifically was by Galbraith, The Crash of 1929, I believe, and also Murray and Rothbard's America's Great Depression, I think it's called. But those two books there, those are my favorite, really breaking it down exactly. And definitely, to short answer your question, yes, a lot of parallels.
And you know what? I'll send you, so Megan, make sure that we write this down. Have you seen the information from the Federal Reserve, Fraser, on all the data on when they first started the transition off of the gold standard and what the central bank, with their charter and what they were allowed to do and how they transitioned us really into a consumer credit-driven economy? So for me, when I dug into all of that data and saw how they weren't really worried about dollars, because dollars are just a debt instrument that they don't have to pay interest on, okay? And what people don't really seem to understand is really what money is. And money is a tool that enables the population to specialize. But when it was originally created, they needed that tool not just to value labor, but to actually hold your excess labor for use with the same level of purchasing power. Well, the system, the fiat system, guarantees that you cannot hold that because by design, inflation is built in to the system. So it's always going to cost you more down the road. And then they get to tax those gains.
They've created a system that's perfect for them,
yes,
and terrible for us.
Yes.
It's genius what they've done. Unfortunately, it's nefarious activities that they're doing behind the scenes, but nobody really cares because as long as they're doing fine and they think everything is great, it's wonderful. But then they realize, oh, wait a minute, my pension check got cut by 30% and suddenly my food prices have risen and I'm not really sure why, but my electricity prices keep going up year after year. Oh, well, I'll just take it and just sit here and watch television or something. I mean, it just, because people are just oblivious.
Yeah, but see, they think that there's nothing that can be done because we've been taught that. I'm so grateful that for your work, not just that you came on here today, but there is a community out there of us that are trying to get the word out. Because while there's really nothing that we can do to stop the inevitable crisis, because that has been you're absolutely right. I mean, that is the plan. Maybe, if enough people understand what's happening on the other side of this mess into the new system, I want us to have some level of say and some level of choice. That's my personal goal for a lot of this, education, and the reason why, we're building community here, and community is you and me and a lot of the other people that are out there doing this kind of work, but it's also the individuals that are watching this and beginning to understand it at an appropriate level. So, and then share that. I mean, that's the thing. we all really have to share this information. That's critically important. You know, who knows how long we're going to have until the next crisis occurs. You know, they keep rigging the system with the tax law changes. Today I was listening on CNBC, and they were talking, and this is probably going to be accurate. They were talking about how the way that the U.S. just did the tax reform, which benefited the corporations hugely, so it dropped that level down. Now that's going to force other governments around the world that have a higher tax level to drop that for corporations. So it's all about the corporations, not the individuals. The trickle-down theory doesn't work, but that could keep it going, or at least making the stock market look like it's going up. But the stock market can go up if the value of the currency loses all value. I mean, 1 trillion times zero, you know, really is still zero. And
the perfect, you know, visual description of what you're just saying is look at the Venezuela stock market. Why not?
Exactly.
I always tell my subscribers, why not invest in the Venezuela stock market? It's the best performing stock market in the world.
Yep.
And people who are obviously they're trolling or coming to the channel for the first time, they're thinking, well, the currency is worthless. Yeah, I got you.
Exactly.
That's what's happening. I mean, to a different degree, of course, but that's really what's happening. And we get that real picture when we look at something physical and understand that this thing, like gold, somehow is still priced at the same level, even though it's something that's like a fixed, it should have a fixed value of some sort. It should be able to maintain value, I should say, but yet it doesn't because of the manipulation. It's very, very unusual. This is probably one of the only times in history that they didn't have a peg on it, and yet somehow it's basically been almost fixed to this price of, you know, anywhere between like 1,100, 1,300 for the longest time. It's been years. I mean, it's just, anyway.
But well, you know, but even talking about that, because that's a great point, except that in 1900 it was fixed at $20 and a 1/20 of an ounce back to $1 bill. You know, so you know, they kind of get us used to it. So now even at 1,100, 1,200, I mean, if you had told somebody back then that it would be at these levels, so even inside of this manipulation, I mean, you could buy a great men's suit with an ounce of gold in 1900, and you can still buy a great men's suit for 1,200 or 1,100 or 1,300, you know, today. So short term, yes. And the other thing technically that I'm huge on patterns. And so when I look at the pattern of gold, there is this cup formation. And the cup formation, and it really does, it takes a while. This is not, you know, if the shorter it happens, the less of a cup it really is. So you want a long-term cup formation because that tells you that smart money is accumulating, regardless of what they say. I am so grateful to my father because he used to always say to me, do what I say and not what I do. And I used to say to him, Daddy, that does not make sense to me. So I listen to what these central bankers and corporate heads say, but then I look at what they do. And when their actions do not support their words, well, I know they're not in integrity. But when they do, I absolutely know that they are within integrity. And what they tell you and me is far different than what they write. I mean, I know you know that because you read all of those, you know, the documents.
Of course. As
well. Well, is there anything else that you would like to bring up or that we should know about you? Because I love your work. And please share more about anything that you feel our viewers should know.
Well, we always hear the term diversification, but I'm the most extreme of this term, okay? We hear diversification, and oftentimes you'll hear from financial advisors and other things, We got a diversified portfolio here. Okay, we've got Apple, we've got Amazon and Facebook, full diversification right through. And you know how silly this can be, but
Yeah.
ultimately we need to be for those who invest in stocks or paper investments, there's nothing wrong with that. If you do that, I've made it public that I do not have any paper at this time. I sold off
I
in
don't either.
2007 and I never looked back because I'm waiting for the opportunity for the system to be fixed. I'm waiting. I'm still waiting. Here I am. But, some people would say that I've missed out on the gains, which is true. However, how are we going to determine when it's the time to sell? That's really the ultimate point. For those who invest in paper, I personally believe that which has been giving dividends is the best thing to invest in terms of paper, because at least we can get a passive income. I'm all about passive income. That's what I like. But there's no telling that you'll be able to get a dividend later. Just because they've paid in the past doesn't mean they're going to pay into the future. So I'm generally not a big fan of paper to begin with. But just saying, if you're holding on to paper, you're best to not be chasing appreciation and instead be looking for the passive income. I'm also loving the real estate as well, but we can see it's a bubble in many areas, but there are areas that it's not a bubble. Okay, there are different places where you can still cash flow on the property. Not many, but real estate is something that I think is great because it earns money in 4 different ways, whether it's appreciation, depreciation, taxes, so on. So this is another thing that people should be looking into. When you're talking about precious metals, you don't just buy the same one thing over and over again. I think we should be buying all different types. We should be buying coins. You should be buying bullion. You should be buying all in small denominations. You should be buying junk silver or common coins. Everything, because we don't know. That's my whole theory, is that I don't know. I don't know what's going to be worth more or less tomorrow. I really don't. So if we're diversified, then we spread the risk. So that's my theory, is basically spread the risk as much as possible. And I also just want to throw in one thing before you comment, is the business, to have businesses as well. If you can produce an income online specifically, then that's the other asset class that people tend to forget about because they work their 9-to-5 jobs and just go ahead with that. So that's all.
So it's a diversification of income. So for me personally, since you and I are absolutely in agreement, is that I'm not, more than I absolutely need to anyway, which means some cash, I'm also not sitting in any paper products at this point. And
Right.
Proper diversification, if you have stocks and you have bonds, or you have mutual funds, you have ETFs, you have annuities, those are all fiat money products. So you are not diversified at all. So you need to make sure that you have the right amount of gold, so that when these do crash down, that's also typically when you'll see gold in terms of the fiat. I sigh because I don't really think of gold in terms of fiat, but that the gold will be able to recoup the loss of those fiat dollars. So that's a proper diversification. Problem with a lot of corporations is there are corporations that are paying out more in dividends and certainly more in stock buybacks than even their income. So that's really risky, but I do agree with you that we all have a need for income. I'm just not willing to risk my principal for that itty bitty teeny bit of income.
Right.
So what I did with all my studies is I developed a strategy that looks at all of the different possible or typical occurrences that happened through these trend cycles, because it's a common one. It's happened over 4,800 times. And then using gold and silver to properly diversify, because personally, I like most of my wealth in an undervalued or fairly valued asset that's in a long-term positive trend, and the least in an overvalued instrument that's in a long-term negative trend. So we have to be clear on what trends we're really, the real trend, not the trend that they've crafted so that you see that and you think, ooh, I'm going to make money meaning dollars, right? Because that's really about wealth transfer.
That's just to finish off. What I like to think of is a lot of the people who will say, well, what price is gold going to go to? Is it going to go to 2,000, 5,000, 10,000, a million? I just say, just have some. Just have some. I sort of think of it in like a dummy kind of way. Just buy some. Do you think that the individual in China who's getting gold because he got married, he's receiving gold coins, that he somehow tracks the value of it? You just get some and you just forget about it. Don't worry about it. Keep it safe, and that's it. And that's all you need to really know. It's not like a technical thing where you need to be tracking, the 200-day moving average on it, and
No.
50. That's not.
We can do that
real. To support us. That's right.
Right,
that's
but that's not real.
Exactly.
That is about perception management. What they want you to think, because like my father said, do what I say and not what I do. They're accumulating, yes. But they don't want you to accumulate.
That's right.
Well, this has been really wonderful. And for those viewers out there, make sure that you see David on his YouTube channel, on Money GPS. All the links for everything are below. Get his books. They're wonderful. You'll want to read them and really educate yourself. I think we both agree that that's really the key. Don't take our word for anything. Don't take anybody else's word for anything. Do your own due diligence, become educated, and share. Please. That's the hope that we have. If we can get this message out to as many people as possible, that gives us power.
Absolutely.
Well, thank you so much. That's it for today. Please be safe out there. Until tomorrow. Bye-bye.
Thank you.